Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A jam-packed agenda for you on today's roster. We've got earnings out from CleanSpark and Marathon. Anthony's going to be giving you his thoughts and analysis on both of those. In addition to that, we just got April production results out for Bitdeer, Hive, and Soluna. So a lot of numbers to go through, a lot of data to discuss. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. Let us know in the comment section below what you thought of the numbers from Marathon and CleanSpark and your top pick in the sector currently. With that being said, let's get into today's video. All right, guys, Friday afternoon, end of the trading week here, but no shortage of news in the Bitcoin mining space. We've got earnings to talk about and production results. A lot of data to go through, Anthony, so let's get into it here. Bitcoin itself bouncing back over 103,000 right now, so holding up very nicely in this new band we're starting to establish going into the weekend. The miners are basically split down the middle today. We've got a couple of the miners up in excess of 10%. Once again, Anthony, it's these small miners we've been talking about all week. Soluna, Gryphon leading the pack. On the other end of the spectrum, we've got TeraWulf. We're going to talk about them a little bit later in the presentation, but unfortunately right now down the inverse of that, or negative 10% on the session.
Yeah, Bitcoin's been trading well today in that range, 102 to 104,000. Miners came out green at the open, but any slight movement in Bitcoin on the downside, touching the 103,000 mark, and they start going red. But as you rightly say, Soluna and Gryphon are leading the pack today. They're up 10%. But I mean, you know, if you just have a look at the 52-week high for Gryphon, it was $1.80. The share price at the moment on a real movement in the last sort of 3 months, really. I mean, it's actually the only mining stock up from year to date. But even at its current price now, 45 cents, it's going to have to go up 4 times to get to the price it was at last year, its 52-week high. So still a long way to go. Soluna also having a good day, you know, getting towards 90 cents. But again, their 52-week high, $8.80, and the share price is at 90. So, you know, if shareholders bought at $8.80, they're going to be like 90% down at the moment. So a long, long way to go back for them. But, you know, it's small strides, and their share price is up 60% in the last month. So, you know, good movements in the last month for those that thought actually now was the time to buy and get in on that stock price there. Marathon's having a good day. CleanSpark as well. They announced their results, and we'll come on to that shortly. TeraWulf having a challenging day at 10.75% down. So that's the biggest loss at the moment there. CIFR and HUT, you know, 3 and 2% down respectively. So a bit of a mixed bag today, but we've got a lot more news to cover than just the share prices.
We certainly do. So let's get right into it. We're going to kick off with CleanSpark earnings. So they came out with what I'll say, Anthony, was overall a pretty positive set of numbers here. It led to an analyst upgrade we'll talk about towards the end of the segment. The only drawback, I could not find a presentation or investor deck to go along with this. We reached out to the IR contact from CleanSpark. He confirmed they did not put out an investor presentation. So we've done our best to piece together some slides here for you, Anthony, but I'll pass it over to you. We can walk through some of the high level numbers, but more importantly, I guess, really the sentiment behind CleanSpark and this 3-month period.
Yeah, I mean, you know, overall, I mean, they don't put it in their headline news, but I mean, they made a loss, and the majority of the loss was down to the fact that their HODL, which is now over 12,000 Bitcoin, that gets valued at the change in price of Bitcoin as at the end of March. And the Bitcoin price end of March was 82,000. It was 93,000 in December. That's 11,000 per coin. So their valuation dropped there. So that was over 120 million just in reduction in value of Bitcoin. So overall, I think about close to about 130 million loss. In terms of revenue, they had a great quarter. I mean, they've nearly mined 2,000 Bitcoin in the quarter. Only Marathon has mined more Bitcoin. And so when you look at the revenues, you look at the margins, you look at electricity price that they've paid. I think the margin I've calculated there, 53% margin, so that's a good margin there. Looking at the costs as well, they've kept some of the costs lower as well. Payroll, SNG went up a little bit, but it wasn't down to stock compensation. That's been kept lower at about 3 million, which is, for a company of the size of CleanSpark, it looks to be a more reasonable amount. I mean, we do sort of raise our eyebrows at some of these stock compensation numbers. Not just, a few miners, quite a lot of miners are obviously doing it. I mean, this is a relatively new industry. We're talking, 7 or 8 years is the oldest miners in the industry. So, some of the other, I mean, CleanSpark's not even, probably half that in terms of age, 3 to 4 years in terms of Bitcoin mining. And you look at some of the stock compensation that is being accounted for, and yes, the argument is it's not all going to be paid out if the company doesn't progress. But I've seen some of the standards for these being paid out, and as long as maybe some people are breathing in the company, they'll end up getting paid.
Yeah, you're exactly right, Anthony. We've heard jokes at some of these conferences, mining execs being paid like the starting lineup of some of the NBA teams in the industry or in the league. So you're exactly right there. Good to see CleanSpark holding this under control. And if you look at the comments from Zach Bradford, he specifically used the word discipline to describe the quarter. So it is nice to see on both the ATM front and on the stock-based compensation. CleanSpark obviously hearing what the retail community is saying and putting a little bit of a halt on those.
Yeah, absolutely. And discipline is one thing that I look for in a company. I'm a chartered management accountant, specialised in cost, and so when you look at companies, you want to make sure they've got a control of costs. And CleanSpark, along with a couple of other miners, seem to have that really under control. If you look at from an asset perspective, they've got $97 million in cash. Obviously, we know their Bitcoin hodl, well, even at today's price, it's over 103,000. They've got 12,000 of it. So that's, well over $1 billion in Bitcoin they've got to utilize. And we know they've started to sell some to cover their operational and capital expenditure. They've turned around and said they're not going to use the ATM until the share price, I think, goes above $20. So it's still got to literally more than double from where it is at the moment before they start doing that. So that's a bit of a help to all shareholders in that short term there. We know the mining stocks can rally really quickly. In terms of total assets, 2.7 billion. Market capitalization is hovering around that figure as well. So literally for every dollar you're investing in CleanSpark, you're probably getting close to a dollar of assets as well. In terms of debt, yes, they have got the long-term debt, 641 million, which is part of that's the convertible note. So total liabilities 766 million, but that's well in hand there in terms of assets to cover that position. And so as a company, they've got to put out I'm going to say from a cash perspective a relatively strong set of results. I mean, we'll wait to see what IREN, who I think are probably the company that can probably at least match CleanSpark, maybe maybe actually produce better. They don't have a HODL, so they're not going to have any FESB rules, but also the fact that when you've got a company who's got a slightly more efficient fleet, slightly better energy costs, according to their monthly updates. We'll see what it's like in the actual quarterly updates, but I expect them to be, margin wise, certainly as good as CleanSpark. CIFR came out with good margins in terms of what they're delivering there, but with CIFR, you've also got to look at the operating costs of the company. And that's where, you know, it can be a bit more challenging there. You've got to keep the other costs down, the ones that you can control. You can control payroll, you can control G&A costs a lot more. You can't really control the energy costs unless you switch the machines off. That's control. But if you're mining Bitcoin, you've got to, you know, keep the machines on, and the energy price is what the energy price is you pay. If you've got a PPA, you know what you've got to deliver. If you're using market rate, then you're managing the market rate as energy prices fluctuate during the day. But CleanSpark, that sort of margin of 53% there, that's pretty good. Bear in mind, we've had a halving and we've had a sort of effectively another halving if you look at difficulty. And their fleet efficiency is under 17 joules a terahash, and will only improve as they grow and bring in more new machines. So overall, you know, a tick in the box there for them, and you know, a reasonably good quarter to have. And I expect the next quarter to be, you know, absolutely gleaming, because at 103,000 at the moment, that's effectively $20,000 more than it was at the end of March. And if you've got, you know, 12,000 Bitcoin at 20,000, you're going to have a significant amount. You're going to have over 300 million of positive benefit that will go through the income statement. So, irrespective of how well they do, they're going to have a potentially a real stellar next quarter when results are released post June the 30th.
Yeah, they most definitely are. We talked about those quarter-over-quarter comparables, Anthony, setting up very nicely for the next quarter here in 2025. It appears the Wall Street analyst community agrees with you on these set of numbers as well. HC Wainwright coming out with a buy recommendation, a price target of $25 on CleanSpark. So again, compared to where they're trading currently, a sizable premium on share price, citing the large-scale nature of this company, the pure play aspect behind CleanSpark really has two of the key focal points. So with that being said, we'll shift over to Marathon as well, Anthony. They also got a couple of analyst updates based on these earnings, unfortunately to the downside, and overall the consensus for Marathon, not a very strong quarter. I'll let you go through the high-level numbers, but again, in terms of consensus here, the street and retail community not overly impressed with these numbers.
Yeah, I mean, you know, the thing with Marathon is that they've got, you know, a few things that are probably holding them back. One is the fact that, you know, they're only ever issuing their total hash rate. And yes, that's grown. I mean, if you look at what the hash rate was back in January 2024, look at where it is this year. It's close to doubled in hash rate. Now, we've said this many times on the podcast over the last, you know, couple of years. Marathon, the biggest miner, used to be by a long way. Now it's actually being caught by, you know, IREN and CleanSpark effectively. And, you know, CleanSpark, you might see them in the not too distant future start producing more Bitcoin than Marathon, because it's down to utilization of their fleet. They just don't seem to be consistently producing enough Bitcoin per month with the size of hash rate. So when you look at their hash rate, 54.3 exahash, you then think, how much are they actually utilizing of that? And, you know, arguably it could be in a sort of like 70% range, 70 to 80% when you look at some of the other miners like IREN, Hive, CleanSpark, you know, in the 90% range. And that's revenues lost. You know, you want to be mining and you want to have Bitcoin. You know, now they've had a couple of good, you know, we know in the last 2 years there's probably been out two monthly updates which were really good. I think December 2023, you know, 1,800 Bitcoin. It was like a record month. And, you know, the question is, could they do it for a second month? And the answer was no, they couldn't. So, you know, for me, they just don't produce enough. The other issue they have is you know, we've got a slide to show you, is the fact that in terms of facilities, looking at slide, I calculate, I think it's 56% of their actual sites they own. So that means 44% still hosted. So, you know, that brings along a number of problems. One is, you know, control. You have no control over those sites. You know, if your machines are down, there's no control as to when they're going to get fixed, when they're going to get serviced, when they get them maintained, especially if it's on a site with other machines there, which take priority. Also, you know, you're as well as an energy cost, you've then got a hosting cost to pay as well. And you know, when you've got, you know, when you own all your sites, and like the likes of CIFR and IREN, who are sort of achieving sub 3 cents a kilowatt hour, for Marathon for many years now, if you look at their blended rate, it's been closer to 7 cents, and they're the biggest miner. If I was the biggest miner, I'd be looking to, you know, achieve some sort of economies of scale in terms of being able to negotiate really good rates for power. If you're going to utilize a lot of power in areas, you know, you'd be looking to get some sort of a discounted rate for that, and we just don't seem to get that level of saving from them, you know. So in terms of margins, they're not competing with the rest of the peer miners. It's a real struggle, and I think some of the analysts have come out, and I agree. It's these set of numbers of, you know, they look big, but they look flat, to be honest. You know, you just need to get, you know, good set of numbers out there. I think they have a strategy. I think Fred said they were looking to, when they switched from the asset light, which I never really got in the first place. They said we're going to try and get to 80% ownership by the end of 2024. Well, at 56%, that's still a far way behind, and we're nearly halfway through 2025. So I don't know what the process of them for delivering, you know, any more infrastructure gains. But the other thing is they've, the one positive thing you've got to say about Marathon, and it is a big positive thing, is they've got this massive hodl, over 48,000 Bitcoin, and you know, no miner can compete with that. I mean, Riot is the next biggest miner with 19,000. And if you think about how many Bitcoin these miners can do per month, maybe 500 to 600, how many months, how many years would it take Riot or CleanSpark to actually get anywhere near Marathon? So that I don't want to make it sound it's all doom and gloom. That Bitcoin hodl is exceptional. And if they can work out how to make a yield from that hodl with all the latest things that are coming out, in terms of, you know, treasury management and maybe, you know, enabling to achieve some sort of a yield on the Bitcoin. When you've got that size of Bitcoin, a yield would be, you know, very much welcomed in terms of money coming in that can offset some of the interest payments they're paying on loans they have. And so that's a very positive thing there. But you know, if they're raising their Bitcoin, they're obviously selling shares consistently to pay for not just operating costs, but capital costs. And so that's constantly going to be niggling the shareholders who see their part of the company getting smaller and smaller as the company starts to, you know, continues to raise money through the ATM. You know, I'm going to say it's a flat quarter for Marathon. It's not going to score any points when you look at the comparison with the peer miners. And what we'll do next week when the IREN results come out, we'll probably look at the big four and just do a quick comparison, just to show you, just to highlight the differences. So we'll probably put the IREN, the CleanSpark, Riot, and Marathon, those with the hash rate over 30 exahash, market capitalization. You know, most of them are heading, you know, 2 to 3. And Marathon's over 4 billion. So, you know, let's see what the comparison looks like there. But, you know, first look at the numbers that come out. I wasn't overly impressed. Yes, I'm impressed with the Bitcoin hodl. I'm a shareholder in Marathon. But for me, getting control of costs, getting control of energy as well. You know, if you're going to buy these sites with wind farms, make sure you're buying sites that you can utilize the energy on a regular basis. And not just maybe if, you know, a few hours a day if the wind's blowing or whatever. You know, you've got to, you know, really tie into a strategy that's going to work. I think Marathon have just seemed to change strategy so much with regularity over the last 3 or 4 years that you just don't know what's going to be the next thing they do. So, as I say, slightly disappointed. Hodl's great, but the rest of the numbers need improvement.
Yeah, two comments there, Anthony. You talk about generating a yield on that impressive Bitcoin hodl that they have. They also put in a slide talking about Bitcoin yield per share. So this was coined obviously by Michael Saylor in Strategy. We heard Jason Less talk about this metric on the Riot earnings discussion. Interesting to see these miners now shedding light. 3.54% Bitcoin yield quarter over quarter. So again, shifting towards that Bitcoin treasury management. However, as you just alluded to, Strategy, the number one company in the world, obviously, for Bitcoin hodl, they're achieving nearly a 2 times NAV, or double the valuation of their actual Bitcoin. We're not seeing that premium in the mining space, even with the second largest hodler in the world being Mara. And I think you're exactly right, Anthony. It's that inconsistent messaging, strategy, and narrative that's really penalizing these miners. With Michael Saylor and Strategy, you know exactly what he's going to do. You know, he's not selling any Bitcoin. He's going to continue buying, continue generating Bitcoin yield per share. But as you said with Marathon and some of these other miners, we don't know if they're going to be buying, selling, mining, looking at Caspa, vertically integrated, asset light. It's all over the place. So yeah, interesting commentary from you there, Anthony. And another thing that's great to see in these earnings decks, again, we didn't get one from CleanSpark. We did get one from Marathon, a really nice comprehensive breakdown of their power pipeline or portfolio.
Yeah, and this is what's quite interesting. So they've got 1.1 gigawatt capacity up to 1.7 gigawatt upside. Now, all the upside is basically at the sites they own, because obviously you won't be putting upside at sites that you're hosted at. So if you look down at the slide there, in terms of what they're utilizing at their sites that they own at the moment, it's just over 600 megawatts, 617 megawatts, and they've got hosted megawatt capacity 501. So that's where we get the 56% owned, 44% hosted. Now they do have, you know, an additional 617 megawatts at the sites that they own. So in theory, they could move a lot of their mining machines from hosted positions into their own facilities if they can get facilities ready for that, and that would then obviously save them that hosted fee and give them the control. And as they've got them sites already, they'll already have teams at those sites. So, you know, not necessarily require the same level of increased staffing to manage the additional fleet at each of those areas. You know, yes, if you have more buildings, yes, you might need more staff, but not to the extent that you're starting from scratch. These are facilities that are already having. So an example like Granbury at the moment already occupies 232 megawatts. They believe that the capacity there is 300. That's an extra, 68 megawatts of power. So, how many more staff would it need to take on that additional? It might need, a couple more staff there, but not the extent of the total number that's there at the moment, the increased proportion. And that's all about the economies of scale then. You've already got staffing in place. You might need to add a few more. But the saving is that hosted fee that you'd have to that you'd stop paying at the hosted facilities. So that's probably maybe something obviously Marathon are looking at maybe. But to have that, additional capacity of over 600 megawatts, that would cover the 44% that's currently hosted. That's something, if I was, part of the company, I'd be sort of like, trying to focus on and see if we can deliver that and get those machines in our facilities, 100% control. And then it's a case of, the power's your problem. Then you just make sure that you can manage the power pricing and, start seeing the results improve month by month.
Yeah, you're certainly right there, Anthony. And a couple final notes on Marathon. 2 analyst downgrades we wanted to mention as well. So we talked about the upgrade from CleanSpark. Argus Research came out with a lowered price target down to $14 on Mara in light of the earnings here. B. Riley also adjusted downward from $22 to $17. So definitely some question marks or concerns with Mara right now and the strategy behind them, as we just discussed. So with that being said, you guys, now we'll shift gears into production results. We've got Soluna, Hive, and Bitdeer on deck. Maybe we start off with Team Seal Miner and Bitdeer here. Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now.
Yeah, let's start with Bitdeer because I was fortunate to be at their offices in Singapore this week to meet with their Chief Business Officer, Matt Kong, who gave me an overview of the strategy at the moment with regards to mining and also regards to HPC. So very, very good to get a little bit more colour on what they're doing there. So the operational update for April came out and we noticed straight away they've added some more machines at their sites. Now energized 3.7 exahash of the SealMiner A1 machines, and there's a further 0.1 exahash that will be energized in the next sort of 5 or 6 weeks. That's obviously going to help them because their machines are better than or more efficient than the machines in the fleet at the moment. Their fleet efficiency previously came down from 32 to 29. I'm going to suggest it's probably lower than 29 at the moment, but that's the number we've got currently. And I spoke to Matt and he confirmed 29 the other day. So maybe when we see the next update on machines going in, we'll show the up-to-date fleet efficiency. In terms of SealMiner A2, a total of 3.3 have been manufactured. 1.2 exahash are in assembly as at the end of April. And of the 3.3 exahash that have been manufactured, the external sales of 1.3 exahash. Now that's come down a little bit from initially. Remember, we were talking about 35,000 machines produced, 28,000 going out to external customers. But I think now what's happening is the external customers are already seeing what's happening with the SealMiner A3, and they want a bit of the A3 because the A3 is delivering 9.7 joules a terahash. That's world beating in terms of what we've seen on the market at the moment. Even with Bitmain's recently released Hydro S21, is not getting down to that level at the moment, and so SealMiner A3 has gone through testing and it'll be going to production later this year. So I think what a lot of customers are doing is rather than just get the A2, they're going for the A3. Now that's not a bad thing for Bitdeer. Remember, Bitdeer have got so many sites coming online this year that they could use every machine to fill their own sites. At the moment, they're at 12.4 exahash. They want to grow to 40 exahash by the end of the year, and they've got the sites coming online. They've got Butan coming on, that's a 500 megawatt site. They've already energized 133 megawatts there. They've got the remaining amount coming online this year. Tidal in Norway also coming online with a lot of megawatts there. And so if customers aren't buying the machines, Bitdeer are going to put them in their own facilities. And, when those machines are mining and mining efficiently, they'll bring in great revenues. And what you got to remember is how much you think Bitdeer are paying to produce these machines. They won't be paying the prices that these miners are paying to Bitmain or Canaan or MicroBT, where it's like, we're hearing after discounts, it might be 14, 15, 16 joules a terahash. I guarantee you Bitdeer are probably making these machines far less than that. So, the return on investment will come back quicker for a company like Bitdeer, who've managed to produce miners lower than what everyone else is paying for them. And then you're into sort of like, profit very, very early on into the cycle. So it's a win-win for Bitdeer. If they can sell the machines and get really good profit straight away, that's good. If they can't sell the machines, or these machines, are not being sold at the moment, put them into their own facilities, produce Bitcoin, and get that return back quicker that way. So it's a win-win. That they're still doing very well both sides of it. It's a very fortunate position to be in, and not many miners are in that position. And we're not seeing a massive amount of fleet numbers coming from Auradine, who are sort of like linked with Marathon Digital. We're waiting to see what Block do with the chips that are going to Core Scientific. That's due to come in the third quarter, but we're already hearing from Core Scientific. After that, really, they're not going to focus on any more mining. It's just going to be a replacement of some of the older machines in the fleet there. But Bitdeer will be producing machines for the foreseeable future. And, they've got a significant track record. Bear in mind, the CEO and the chairman of Bitdeer, was the co-founder of Bitmain. So he's probably got a little bit of secret sauce, that he was utilizing back in the day, and has led the company now to deliver, equally, good machines out there. And the test will be, when the results start coming out from these machines, when they're producing Bitcoin, and see what that looks like. But in terms of Bitcoin mined for the month, that was increased to 166. So we saw the hash rate go from 12.1 to 12.4. That was a 2% increase in hash rate. But however, the Bitcoin mined was increased by 46%. And remember, I think last month we talked about some of the facilities where they'd had some downtime. Well, it looks like April's been a really, really good month in terms of production there. Current operational power also increased by 23%. We talked about how they've energized at Bhutan and also in Norway as well. So part of those facilities coming online there, that's grown 23% from 895 megawatts to over 1,098 megawatts. The total global capacity keeps increasing. That's gone up by 2%. That's now at 2.69 gigawatts. Fleet efficiency, I said it's 29. Until we hear otherwise, I would suggest it's lower than 29 when you're adding 3.3 exahash of the A1s. The A1s would be lower than 29 joules a terahash, and therefore the blended hash rate would the blended efficiency would come down. In terms of HODL, increase the HODL by 8%. So it looks like Bitdeer are, hodling quite a large amount of their production. They are selling it a little bit as well to help cover their operating costs. And in terms of HODL value, that increased by 23%, obviously because the price of Bitcoin increased between the end of March and the end of April. And so current HODL, as at the April the 30th, valued at $117.4 million. So, overall, a good update. We're still a little bit short on utilization. So 13.4 Bitcoin per exahash. You look at some of the leading miners in the month, they're at 15.8. So there's probably a 15-16% gap. However, what Bitdeer don't do that most of the other miners do, they don't put average operational hash rate in their numbers at the moment. Maybe they start doing that in the future. Time will tell. Let's keep a lookout for that. They're only showing the full amount, as do Marathon Digital as well. They only show the full hash rate. And we've talked about, reasons probably why they don't show the utilization. They probably don't want to let people know how many machines are not working or delivering at any point in time, because their realized rate is significantly lower than their total analyzed rate. But I'd say a good update from Bitdeer.
Yeah, I'd agree, Anthony. You talk about some of the cost advantages of that vertical integration, seal miner in-house approach. The other thing we heard yesterday from the team at Luxor in relation to tariffs, right now there's an exemption window of 90 days out till July 9th on ASICs or any importing of these machines. We saw IREN make reference to that in their presentation as well, saying they're trying to really push forward to get these machines in the United States before July 9th. But with Bitdeer, as you alluded to, that huge international portfolio, they can essentially take these machines. They don't have to worry about tariffs. They can put them into their own facilities outside of America and North America, and really have a unique advantage there as well versus some of the North American or US-based miners. The other company we wanted to talk about here, also with a big focus outside of the United States, is obviously Hive. So they've continued to push forward with their Paraguay facility expansion. That was the facility they purchased off Bitfarms. We covered that story earlier in the year. They're now up over 7 exahash, Anthony, and really making strong strides in terms of that fleet growth that they talked about on the podcast.
Yeah, they've achieved over 7 exahash, a total of 7.3 to be exact. That's a 10% increase on the previous month, where they were at 6.6 exahash. And that's due to the first of the 100 megawatts hydro-powered facility in Paraguay being energized. Now, the average hash rate for the month, this is what they had in terms of machines that were working during that month, was 6.5. They've mined 102 Bitcoin. That means 15.8 Bitcoin per exahash, which is up there with the leading 2 or 3 other miners. I think Riot and CleanSpark also had similar to that target there. They haven't put out a HODL this month for some reason, and that hasn't happened many times in the last 4 or 5 years. Suggests maybe they probably sold some of the Bitcoin to cover some of these costs in Paraguay in terms of the growth, maybe some of the growth in HPC as well. So we'll wait to see an update of that. They have got their earnings coming out. The full year earnings will come out sort of in June. But they released their HODL for the previous month, I think it was 2,201 for the end of March, and that will be the number that's in their earnings. So really April is an additional month. But we've seen a lot of miners sell Bitcoin this month and not, sell significant amounts. So Riot, the first month, they've sold a large amount in the last 18 months. CleanSpark also over 400 Bitcoin. DMG also. A lot of these miners using it to get that growth to where they need to be. It's another lever. The Bitcoin price, has been kind to the miners in the last few weeks. So maybe making, access to getting close to $100,000 of Bitcoin, maybe was a time for some of the miners to use that particular lever. And so we'll wait to see what Hive bring out in terms of, what they've sold there. But they have been selling some in recent months to cover those costs. So we'll wait to see what that looks like when it comes up.
Yeah, we certainly will. We also got a couple nice images from the Iguazu site here, Anthony. You can see that nice red clay soil we talk about on the channel, some of the pads, groundwork going in, some of the earthworks already taking shape, Anthony, really moving in the right direction.
Yeah, I know it looks impressive. Again, this will be coming online during this year, and for the astute of you that can, I think to me looks a bit like Rafa Nadal there on the right hand side, marking out one of the tennis courts there. It's obviously a clay court. He's probably the best ever tennis player on clay. So maybe if you get the opportunity to go down to that site, then maybe have a game of tennis with Rafa. But yeah, looking really, really good as a site there. All the preparation's been done there. I would imagine the facilities will go up quite quickly. And, by the end of Q3 2025, Hive are expected to be, well over 20 exahash, heading towards that 25 target, and certainly achieving that by the end of this year. Again, otherwise the market doesn't look as favorably. But a good update in terms of letting us know clearly what's happening in Paraguay. It looks like they're on track.
There you go. And for those of you who are unaware, interesting fact, Anthony was actually a tennis coach in his earlier life in the Army. I attended the University of Melbourne for a year, and we went to the Melbourne Open, so I got to see some tennis firsthand as well. So there you guys go. Next up, Soluna, shifting gears from tennis to renewable energy here. Soluna giving a nice little production update. Another thing I really enjoy from this company, they give a very detailed breakdown, each one of their sites. They've got a lot of different projects. Another interesting fact, actually, each one of these is named after a famous female a researcher in the science field. So that's a great recognition from John and team. But they give a nice little update on each one of these projects. Anthony, we saw some interesting weather this month at one of the locations. But in general, again, making great progress on all fronts here at Soluna Holdings.
Yeah, and we talked about the share price, starting that slow recovery to get closer towards where its all-time or its 52-week high was back in 2024. In terms of, we'll cover on the self-mining at the moment, and maybe you can highlight a couple of the projects that are going through. But in terms of self-mine, they mined 10 Bitcoin during the month of April there. That's 17% down on the previous month. Obviously, we know the difficulty and the day less mining. That would account for 10. So maybe having to switch off some machines in some areas, bit of curtailment there. In terms of operational hash rate, that was actually down as well by 9%. So that accounts for the reduction in Bitcoin, taking account also of difficulty and the day less. Their efficiency is 26 joules per terahash. That's probably sort of middle of the pack in terms of where that is. There was a few miners got a lower efficiency, a few miners have got higher efficiency. They do sell on a regular basis. They don't hodl Bitcoin at the moment. Maybe that changes in the future when they start getting some revenue from these other sites. And we're talking about some larger scale sites. So maybe you can just talk through a couple of those projects on the go at the moment, Bryce.
Yeah, most definitely. I'll throw up the slides on the screen here so you guys can follow along. The weather I was referring to is at Project Dorothy 1A. You can see experiencing several abnormally severe weather events. We've talked about the importance of weather on Bitcoin mining, specifically with how it impacts the ventilation, sometimes the snow buildup, things like that you wouldn't necessarily think of out of the box. So we'll get an update from John on that situation next time he's on the podcast. At Project Dorothy 2, building materials are now on site for phase 3 installation. That's that 48 megawatt Bitcoin hosting project that we talked about on our prior coverage of Soluna, Anthony. They also gave an update on Project Caddy. That's the 166 megawatt Bitcoin hosting and AI facility. The phase 1, so this is going to be 83 megawatts. Substation upgrade is now complete, so that's another big step for the company. And at Project Sophie, that's the 25 megawatt Bitcoin hosting, profit share AI hosting facility or project. 3.3 megawatt fleet upgrade taking place over the next 2 weeks to expand existing customer capabilities. So as you can see, a number of bullet points you can go through here. Feel free to pause, but some great progress and all of this going on in unison at Soluna Holdings.
Yeah, no, some good updates there, and also we don't normally cover the hosting, but for Soluna, they're increasing the hosting. We've talked about new customers, Bit Digital coming on there. Also, they now have a contract with Blockware, and they've just seen the deployment of the first 350 next generation S21 Plus miners. And the initial deployment target of 5 megawatts of S21s is expected to continue and ramp up at their Dorothy 2 site there. So whereas the self-mining, the hash rate, average hash rate come down in April, their actual hosted hash rate increased in April, and for those reasons that we've highlighted. So very much working on building all their types of business within the Soluna family. There, they've got obviously the cloud, they've got the self-mining, they've got the hosted mining. They've got the future HPC hosted facilities once they're put in place, and there's a lot of strings to the bow with Soluna. We keep talking about the size of the market capitalization, but there's certainly, from a project point of view, punching above the weight. And have a look at some of the numbers there in terms of megawatts that they're actually utilizing at some of these sites, or they will be utilizing at some of these sites when they go online. Significant amounts of power. They've got a pipeline over 2 gigawatts of power, and they are delivering relatively big projects. You talk about Project Catty. Phase 1 is 83 megawatts, phase 2, 83 megawatts. That's 166 megawatts there just for one project, and they've got like 3 or 4 similar sized projects to that there. They've actually put a table which we can show in the actual podcast there of all the sizes of the projects there. So Project Rose 187 megawatts, Heady 120, Project Ellen 100 megawatts there, and these are all for BTC hosting AI and in the development stage, but significant amounts there. Once they get the sort of like the funding available for those, you'll see those start to ramp up even further, and those revenues then should drive and enable Soluna to do a lot more than they're doing at the moment.
Yeah, sounds like a plan there. Anthony, before we let you go, I just noticed TeraWulf earnings as well. We're going to go into more detail next week, do some comparative tables, looking at the margins, the revenue between some of these earnings reports. But we didn't want to forget about the Wolfpack. Fairly quiet from TeraWulf over the last quarter or so. They've paused their monthly updates. They're obviously very focused on this Core 42 HPC AI expansion. We talked about sentiment earlier in the podcast as it relates to CleanSpark, generally viewed as a strong quarter. Marathon, maybe not so much. TeraWulf again coming under fire here, as you can see with this one, Q1 2025 earnings, TeraWulf's laughably bad quarter, citing a 19% year-over-year revenue decline and a staggering $59.6 million operating loss driven by stock-based compensation. So you talked earlier in the podcast about the stock-based compensation in this space. Once again, it appears other people are picking up on this, but maybe we can talk through TeraWulf at a high level here.
Yeah, I mean, TeraWulf, were obviously a Bitcoin miner. They had the nuclear facility, which had cheap power there, 2 cents a kilowatt hour. They've sold that to a hyperscaler and used that funding to then start delivering their own HPC project at the Lake Mariner site there. And they've got this project with Core 42. I think it's 60 megawatts of HPC compute hosting at that facility there, with the opportunity to expand that. And we'll see if there's any more updates that come out in the future showing that expansion. But the mining, it's sort of a bit flat in terms of where they are. They haven't really increased hash rate for any significant period. They actually put a note out previously to say they weren't going to raise or put out any future growth in hash rate, just basically keep the hash rate that they had at the moment, as it was a good income driver there. They mined 372 Bitcoin during the first quarter. We haven't seen any monthly updates for a while. They stopped doing those monthly updates. And so 372 Bitcoin, 4.1 Bitcoin a day. Their end of the period hash rate was about 12.2 exahash. The one thing that concerns me is the power cost, 8.1 cents per kilowatt hour. That's massively more than they were paying, previously when we were covering these in more detail. I mean, they themselves say it's a 65% increase year on year, which was caused by the elevated power price during an extreme winter weather conditions. Now, we're not seeing that level of power cost affect the miners that have released their results already for the last couple of quarters. But TeraWulf obviously feeling that there, and that will severely impact their numbers. Revenues were 34.9 million and adjusted EBITDA was negative 4.9. That's down from 31.9 million in the first quarter of 2024. And they're citing the fact that we've had a halving event and obviously the increased difficulty, which we've talked about on the channel. I mean, the halving event and the difficulty looks like a second halving, to be honest with you. That will affect miners in terms of production of Bitcoin. But miners have got to, constantly look to try and reduce cost and, make sure they can try and access the cheapest energy. And it looks like that energy is causing them a real problem. With HPC, it's not as big a problem because, the power cost in terms of the margins made in HPC hosting, not really a problem. I mean, Core Scientific are making, an average of between 71 and 80% for that contract over the 12-year life of a $10 billion contract. And their energy costs are probably around the 5 cents a kilowatt hour. So to mine it's not a great price. It's manageable if you've got a really efficient fleet, but if you haven't got an efficient fleet, you want to make sure you're lower than 5 cents. 8.1 cents is significantly high.
Yeah, and what's interesting about that Lake Mariner facility, Anthony, the power there is provided by Beowulf. And if you look up Beowulf or their website, you can see Paul Prager is actually the founder and president of this company as well. So a little bit of a unique situation where there's a relationship between the power provider and TeraWulf. The old analogy with Peter and Paul come to mind, but definitely a little bit of a concern on the energy price side of things for TeraWulf.
However, TeraWulf do have, 218 million cash and cash equivalents. However, the debt there at the moment, 281 million, that was because they've obviously took out the convertible note to help this process of building out the facilities ready for Core 42 to join there. So I think we're in that sort of intermediary ground, waiting for the Core 42 revenues to start coming through. In the same way we've discussed with Core Scientific, we're scratching our heads, working out why the market aren't giving them more favourable share prices when they've got this enormous contract, which they're locked in really good with CoreWeave. I would imagine TeraWulf in that same position as well. The market's not loving it at the moment because we're not seeing physical revenues. Once those revenues start coming through, maybe these companies will start getting some more credit from the market.
Yeah, let's hope so, Anthony. And we've got that nice slide showing the two verticals, the mining and obviously the HPC AI compute, and in the transition period, as you mentioned. Final point here, you guys, busy week next week. So obviously a lot of numbers, production reports, earnings we've been going through all week. We have the privilege of three executive interviews next week. So we've got IREN on the 15th, going to be going through Q3 earnings. This one's obviously very topical right now with energy prices, with their fleet efficiency, and that Sweetwater campus or data center that they're building out. A lot of questions there. Bitdeer, as you alluded to, getting an update on the Seal Miner platform, the tariff situation, expanding that global hash rate. And then on the 17th, Bitfarms, Ben Gagnon going to be coming on talking about that Panther Creek. A lot of activity, a lot of analysts talking about the HPC AI potential within that former Stronghold project portfolio that we've talked about on the channel. So no shortage of news, as we say, Anthony. Bitcoin continuing to trend up, 103,300 here. An incredible week for Bitcoin, the miners, and a great way to end out the trading session. And with that being said, you guys have a phenomenal weekend. We'll be back here on Monday to provide more updates. Hit the like button. Feel free to subscribe. We'll see you back here soon.